Chapter 4 covers personal banking. It is important to determine what kind of bank you should use. In order to do this, it's important to understand the differences in banks and your needs. These are the things that you'll cover in Chapter 4. We will start by looking at different types of banks. As you already may be aware, technology has changed the way we do many things in our lives, including how we bank. We now have ATM machines, debit cards, electronic banking, and telephone banking. In fact, the use of debit cards has long since surpassed the use of writing checks. We also have mobile deposits. Most of us use retail banks. These are those that are used mostly by individuals, but also businesses. They have a brick and mortar presence, but they also have an online presence. Choose based on convenience. If you are going to have to stop at the bank often, then you want something on your way to or from work, not a bank across town. This may not be a factor for you. Costs Banks can charge a whole lot for checking accounts, overdraft fees, and minimum balance fees. Find a bank that doesn't charge a whole lot. Read about their overdraft policy. Your checking account is likely the single most important financial tool you have because you use it every day in some capacity. Look for the best options for your needs and as little as possible to maintain. Some recent rule changes on fees that banks can charge have caused them to reassess, so be sure you check on what they are charging you. It's never too early to start saving. Savings accounts are also known as a deposit account, which can come in several different forms. Traditional savings pay higher rates than interest-bearing checking accounts, not much higher. Sometimes online savings can pay even higher because they don't have as much overhead costs. But there is sometimes a 3-day waiting period to access your funds. The best thing about traditional is that your money is liquid. This means it's available to you at any time. Certificates of deposit are interest-bearing savings accounts that are purchased for a fixed period of time. The longer the period, the higher the rate. If you withdraw early, in most cases you'll be charged a stiff penalty, depending on how early. Money market accounts, deposit accounts, pays relatively high interest rates and offers limited check writing privileges. They come in 5 different formats that you should read about in the textbook. Internet thieves devise new sophisticated ways to trick consumers into sending money or into revealing information that can be used to commit fraud. Be vigilant about both of these things that can come through email and social media. Check your online accounts often. Report immediately any charges that you know nothing about. Sign up for email alerts and other notifications so you can be reminded to check your accounts. Phishing is a high-tech variation of the concept of phishing for personal information. Never give out personal information over the phone or in email. If they are legit, they won't ask you to do that. Be careful with passwords, make them secure, don't write them down, and don't give them out and change them often. Scareware frightens people into doing something, downloading, sending money, giving information. Beware of secret shopper ads and online job postings to work from home. Check with the Better Business Bureau if you are unsure about an online shop. If it seems too cheap, it probably is. Before doing mobile banking, take security precautions. Never do this on an unsecured wireless network such as McDonald's or Starbucks. Find out if the bank you're considering even offers this service. Credit unions are member-owned, not-for-profit, federally insured that provide similar services to banking. Their focus is only on serving financial needs of members. The members share a common bond. The credit union may serve multiple groups with similar bonds, such as teachers, policemen, federal workers. The members also share in the income from the services. Online-only banks offer anytime banking. They usually offer higher interest rates since no overhead or there's relatively little overhead. You never have face-to-face contact with a rep, which is sometimes a negative for some people. It can take a couple of days for transactions to go through. Also, this can be a negative. And technical problems can be a problem. Commercial banks only have relationships with businesses. Investment banks deal with capital markets such as the stock market. Savings and loan institutions primarily just provide long-term residential mortgages. This is the end of this video. Be sure you read the chapter for more specific information.